Hello, I'm Brooks Raiford, CEO of the North Carolina Technology Association, or NC Tech, and welcome to this special edition of NC Tech Chats, where I have brief discussions with interesting people doing interesting things. NC Tech is a statewide organization with over 600 member companies, organizations, and institutions, and our member companies collectively employ over 200,000 North Carolinians. Among our members are dozens of startups and early stage companies, as well as financial institutions of all types and sizes. I mentioned that because we are recording this on the morning of March the 14th, just days after the collapse of Silicon Valley Bank and subsequent federal actions to ensure coverage of deposits. I'm really happy to have as my special guest today a good friend, Tim McLoughlin, managing partner of Cofounders Capital, which is a venture firm based here in the Triangle in North Carolina. Tim, thanks for being with us and for helping to unpack what's been happening.
You got it. Thanks for having me, Brooks.
Absolutely. Well, first, tell us a little bit about your firm, Cofounders Capital, and then we'll dive into our topic for the day.
So Cofounders Capital, proud NC Tech member. We just raised our third fund, which is a $50 million venture capital fund focused on investing in early stage, seed stage technology companies, B2B software primarily, in North Carolina and across the Southeast. So we're writing checks of $1 million to $2 million into companies at their earliest stages to help get them off the ground, launch, go, create jobs, and then hopefully return capital one day to our investors when those companies sell.
Got you. Well, thank you for being with us, and congrats on the successful race. Let's start with some basics. So many people outside the tech or the startup community had never heard of Silicon Valley Bank, and I'm going to say SVB going forward, until about a week ago, and yet they had become the nation's 16th largest bank. So what was SVB's focus or target market?
Well, if you're in the venture world or the startup ecosystem, you know SVB, they're around, they're at all the events, and their focus really is to get banking relationships with companies that aren't going to get the same kind of treatment from some of the larger banks, your Bank of America's, your Wells Fargo's, that are typically going to lend money to more established companies, cash flow positive companies. Whereas in the venture world, certainly riskier plays, companies that are losing money at in exchange for high growth. So you're looking to raise venture capital. You're also getting venture debt from banks like Silicon Valley Bank that will take kind of those earlier stage, riskier plays for some upside sweeteners. And so if you're involved in the venture world, you are around Silicon Valley Bank all the time, somebody that you know people that work there. And then a lot of the venture funds and the companies will also do their deposits and their banking at Silicon Valley Bank. And often that helps start the relationship before there's some sort of venture lending kind of opportunity there.
Got you. And I believe SVB has had a presence in the Triangle for some time. Is that right?
That's right. That's right. We've known a lot of folks that have been at SVB or currently at SVB, and yeah, have good relationships with a lot of the folks over there.
Gotcha. Well, I'm going to do something very risky and give at a high level my layperson's understanding of a little bit about how such an institution could unravel in 36 hours, like happened last week, given its size. And it's about a 40-year-old bank, so it's not a newbie, even though it's not a venerable 150-year-old bank. They had put a substantial amount of their capital in long-term bonds at what turned out to be a fairly low interest rate. And as inflation rose over the past year, the Fed began to raise rates to keep the economy from overheating, which of course put pressure on SVB and other banks because, among other things, they have to pay higher rates to depositors than they were making on their own capital. On top of that, inflation and rising rates cause a slowdown in venture funding generally and pressure on startups in the tech sector in particular. So SVB's core customer base started to need to pull funds out at a rate that they had not necessarily had to before. And then last week, when word began to get out that the bank was going to sell the bulk of its bonds at a modest loss to raise cash and even issue, I think, some new shares of stock as part of their cash raise, that caused alarm bells to go off in the minds of people who do what you do, who manage funds and have portfolio companies, who began advising their companies to consider moving funds out of the bank and into larger institutional banks. So that sort of precipitated this run on the bank, as we keep hearing. And by Friday, the regulators had stepped in, shut the operations down, halted trading of their shares, and took over the bank. So I'll pause there because a lot happened over the weekend and into the first part of this week. What else do you want to add to what I've just described, or what do you need to correct?
No, I think you did. I think you did a great job. I'll just talk through kind of how it funneled down to actually people going to the bank and pulling their money out. And so two things really signaled that there might be a cash crunch at the bank. The first is, as you had mentioned, selling long-term bonds at a large loss. I think about a $2 billion loss. That signals if you're going to do that, you need cash for some reason. Another thing was issuing, I think, about another $2 billion in equity and cash that could come, new cash that could come in. So when word got out, you got to keep in mind, this is a very relationship type business. The folks that we bank with at SVB are relationship people that are building these over years, even decades, to get our business and the business of our startups. So word starts getting out, hey, listen, you may want to start telling your portfolio companies, who, by the way, will need to make payroll in 5 or 6 days, that they might want to have some more cash on hand in case anything were to happen at Silicon Valley Bank. When that happens, venture capitalists will put out, so some venture capitalists are banking with SVB and are worried about pulling their money out. And so now we can be talking about large chunks of money, tens of millions of dollars, pulling that money out and making recommendations to their portfolio companies that say, hey, you have an obligation to be able to make payroll next week. Make sure that your money is diversified, or you pull some of your money out of Silicon Valley Bank. Well, at the speed of Twitter these days, everybody all of a sudden says, I'm going to get my money out. I recommend you do the same. I just talked to a founder this morning that said at 10 a.m. on Thursday, he was at the bank pulling all their money out. Other founders trying to figure out how to get their money out. And then when it trickles down to the founders, all the founders are thinking about is what's in the next 5 or 6 days, which is, I need to make payroll. I have all of my money locked up in SVB and I need access to it. So when you think about how that flows through, you can see how very quickly funds are going to get withdrawn and there's going to be an issue here. I would like, if it's okay, just to say on the other side, kind of one of the macro trends is, been very hard for companies to raise private venture capital over the last 6 to 12 months. It's been a real challenging time. So deposits in general at the banks have been going down and down and down, while startups have been looking to pull down more and more on lines of credit that they may have been able to get from banks like Silicon Valley. So it was just this perfect storm that all came together right at the same time, which said, hey, we're going to get our money first, and my employees are going to be, my companies and my employees are going to be okay.
Well, you touched on something that I think a lot of people hadn't realized, and that's the ripple effect. So you mentioned payroll, and there were stories of companies where late last week, as this was all beginning to unfold or had not even yet unfolded, an outsourced payroll company might come in and do a sweep to take out the full dollar value that a company has for payroll. And maybe they weren't even banking with SVB, but the payroll company was. And all the money goes in the payroll company's account at SVB, and they could not honor payroll because their funds were tied up as of Friday anyway. So it's interesting how this ripple effect can happen.
Yeah, ripple effects, and think about other companies who were worried about their bank start doing payroll early. Well, now they're pulling money out of their bank accounts a little bit sooner than expected, and so that now you see how even if you have multiple banking partners, you can see how this ripple effect can kind of can go through.
Sure can. I'm going to combine two questions in the interest of time. I was going to ask you about, first of all, in the last couple of days, several hundred tech company leaders and venture fund leaders and so on around the country signed onto a statement saying that if SVB were to be preserved and back into business again, they would like to support the bank and do business with it. I think you mentioned the sense of community among the startup early stage funding world. And that's an interesting statement to make about a bank. And then I was going to ask you about the very recommendation you just touched on, which was, as a few days ago, funds like yours may be encouraging portfolio companies to consider moving their funds into a larger, more established bank. So let's just combine those two.
Sure.
What are your thoughts about SVB and its whatever its future looks like, and confidence in trying to have a community rally around an institution like that? And, what are the reasons to consider staying with a large, more traditional bank, at least for now?
Well, I do think that banks like SVB have played a huge role in the success of the early stage entrepreneurial ecosystem, and a huge role for venture capitalists, being able to provide not only flexible deposits and be a flexible banking partner for early stage companies, but also venture lending in the space that they're willing to do is different than most banks. So they really fit a need, which is why they became such a large bank and a large player in the ecosystem. So would we work with that bank again? I think absolutely. We work with the people that are at the banks kind of in our network, and we would work with them again because they fill a need. I would, however, caution our portfolio companies on having exclusive banking partners and being so reliant on one line of credit, one area, one bank that you're deposited at, and to make sure that you're diversified across your banking partners. So you had mentioned one of our recommendations was to bank with one of the larger banks that's out there. Well, maybe one that has a different risk profile and a different investment profile than a Silicon Valley bank. So if you want to take some of your money and make sure that you're diversified across a Silicon Valley bank and a Bank of America or JP Morgan, have multiple accounts, have multiple access to liquidity, have the ability to transfer funds pretty regularly. There are a lot of founders that had to spin up a new bank account Thursday, Friday, Monday to try and solve this problem. And that's not an easy, quick thing to do. It still may take a couple days. And so have those relationships established. And that's what we were recommending to our portfolio companies, was just to have that diversification.
I'm glad you said that. A number of members of the Tech Association are banks and financial institutions of various sizes and types. And a number of them reached out to me late last week to say they had stood up, SWAT teams, task forces, pick your term, to really streamline the process of getting accounts set up into a matter of hours versus a matter of days, to try to address some of these problems. So at least there were some resources available. And as is also worth noting, even before all of this, the FDIC insures up to $250,000, not per account, but per institution where you have money. I think a lot of people have not understood that. And the president's announcement on Monday morning, I believe, was that the rest of the funds would be covered not through an appropriation or bailout in the traditional sense of that term, but by using funds that are raised in the form of fees that banks pay into the FDIC, in the hopes that eventually there'll be a buyer of SVB, or it might come out in some new fashion. So it's going to take a lot of players to make this work. Let's end on that question. What's your opinion of on the impact on the banking sector generally? The consensus seems to be this is sort of specific to this type of bank. There's a handful of them. I noticed before we started recording that Pacific West Bank and First Republic Bank are up 50% today off of yesterday. There seems to be some recovery happening. The big banks have sort of stabilized in their stock prices. So what's your take on that?
I do think that there's going to be a shift in over the next couple of weeks in where people are banking and the number of banking partners that they have. So I can see some reallocation of funds. Like I said, more diversification of banking partners. So I can see there being some variance over the next couple of weeks on what that looks like, but I do think it's going to be settled down. I am interested to see what the FDIC does as far as insured deposits, whether that number goes up, whether all deposits become insured, whether the banking fees that you had talked about, whether those banks are going to have to pay more to cover maybe in higher insured deposit accounts or to a higher amount. So I do think that there will be some changes and some fluctuation over the next couple of weeks, but I do expect that it will settle down, and I'm hopeful that we'll get to that point.
Well, we can all certainly hope so, and hope signs are pointing that way. Well, Tim, I really appreciate you taking the time to join me, especially on such short notice, and thanks for helping us understand some of what's been dominating the news in the last few days. For our viewers, you can find previous editions of NC Tech Chats and other programming on our YouTube channel, which can be found at our website, nctech.org. Thanks for joining us.